Good day to one and all. This is Dr. Sivaraman of iknowintersys.com. Thanks, Sandra, for confirming the sound. Okay. Asian session live market analysis on February 6th. Between 5 and 5:30 GMT, we will review the market using the live market code page. Let me give the link for the live market code page. You can open it in a browser. I'll also focus the camera over the live market code page. Now you should be able to see the live market code page. And currently, Euro is trading around 1.3083, 1.3085, 74 pips negative net change is seen. The high is 1.3131, the low is 1.3081. So market is closer to that of the low. This is the GMT time. Then in the case of yen, it is trading around 76.75, 76.76. 76.80 is the low, 76.50 is the high, and 76.50 is the low. 15 pips positive net change is seen. And in the case of GBP, it is trading around 1.5771, 1.5773, 1.5823 is the low, 1.5770 is the high, and the low 5770. 42 pips negative net change is seen. So you find that Euro and GBP are showing negative net change and USD Yen is showing positive net change. Similarly, USD CHF is also showing positive net change. So that indicates that USD gaining moves are happening at the moment during the Japanese session. Then USD CHF is trading around 92.18, 92.21, 92.20 is the high, 91.90 is the low, 39 pips positive net change is seen. And Canadian dollar also showing a positive net change as the USD gaining move. 99.52, 99.55 are the current levels. 99.56 is the high, 99.28 is the low. 18 pips positive net change is seen. And Australian dollar, which has made an upward stop to 1.0775 and dropped to form 1.0711 as the low, and currently trading around 1.0716, 1.0718. 53 pips negative net change is seen. So in all, you come across the USD gaining move. What happened to that of the crosses? If you see the crosses, Euro Yen is showing negative net change, GBP Yen, Euro GBP is showing negative net change, Euro CHF is showing negative net change, and Aussie Yen, GBP Yen are all showing negative net change. GBP CHF is showing positive net change. So you find that the crosses are not handled that much, but they are just making USD gaining move to start with in this particular week. So we know normally they make the week beginning false move. On Friday, after that of the non-farm payroll, they made the quick gain as a risk appetite move in the case of Euro and GBP. They went up to 1.32 area and then came down all the way because the data was positive. So they said USD gaining move has to happen. Then during that of the US session, they made the drop nominally, and then towards close of US session, they gained again and without any explanation. So that is how you find the market is bound to make such swings, and normally it depends upon the traders' pending positions. When the traders are all long, then they try to make the drop to induce them to liquidate the long positions before making the rise move. So this is what you come across every day. And for the non-farm payroll also, without much of a big moves, they are just made either way moves in the case of Euro and GBP. And now you come across the new week. So we could be able to see the week beginning false move. So irrespective of the type of moves what they do, first of all what we do is we make a note of the initial lows and the highs around 3:30 GMT from that of the live market code page and see how exactly that particular low or the high are being handled during the course of the day. And we note down in the case of 4 majors and 2 commodity pairs and try to find out how exactly they intend to breach the low and come down or breach the high and go above in order to identify the type of moves they wanted to do. we know that stop and is a one. They breach either the high or the low and reverse back in less than 30 minutes. False move come up to that of the high or up to that of the low and reverse it. And the extended move is they breach the low or the high and stay below the low or above the high for more than 2 hours and then reverse the market. The intentional move, they try to hold below that of the initial low for more than 2 sessions or above that of the high for more than 2 sessions. So this sort of type of moves we can identify. Once we identify the first type of move, then the following sequence can be derived out of that. So every session they could make a false move or a stop and to start with. Then if they make an extended move, they alternate with it of the intentional move. Then again the false move or a stop and then they try to make the extended move. So alternatively extended and the intentional moves are being shown in the market. In between you come across the stop and also the false moves. So these sort of moves we can easily track when we try to identify where they are staying, whether they are near the low or near the high. So once we read the market using these techniques, then possibly we go in for the trading. So when the market is near that of the low, we try to buy when the low is not been breached for more than 30 minutes, or near that of the high, sell if the market has not been breached for more than 30 minutes of our observation. But still, we do not want to take a chance, so we keep 30 pips hedging order or an entry stop, which is also known as entry stop in the platforms. And also, if the hedging is not available, we use the stop to limit the risk to 30 pips. Then once the position makes profit, we keep stop at entry. If we are hedged, then we view the hedge for 30 minutes, whether the hedging is making loss or profit, or alternatively showing loss and profit. Accordingly, we try to keep stop at entry in that of the hedging and try to close it. If the hedging continues to make loss for more than 30 minutes, gain for more than 30 minutes, we try to hold the position for at least 2 hours to 2 sessions and try to close it with a profit and keep another hedging order at the lower level to limit the risk. And when they gain the levels in the market, we trail the hedging order upward and try to close the buy position as well. So this way, whichever way the market moves, we have the technique to handle the positions. So this way, we will be able to consistently earn money from that market. If they drop, okay, fine, I'll earn it from the hedging. If they rise, fine, I'll earn it from my original position. That sort of understanding will eliminate the market fear. And once the market fear is eliminated, we will be able to really see good trading opportunities prevailing in the market from time to time, because market means swings. It has to make up and down moves, and we will be able to capture some of the swings, but we cannot capture all the swings which are happening in the market. And always we have to keep it in mind that we have the human limitations. We cannot keep awake for 24 hours. We can only trade during the time which is freely available for our trading purpose. If you are a full-time trader, then try to take some rest and try to focus on the market when you are fresh, so that you will be able to read the market properly and earn from there. If you do the trades with stress, invariably the trades go wrong. So always try to wait to take positions in the market rather than taking a position and waiting for the position to make profit. So in order to do that, what you have to do is enter when the market is making quick moves. Whether the market is near the low or near the high, you just see, and afterwards you just look for the quick moves. When such quick moves happen, we know very well the players make the quick moves during the start of the session or during the close of the session. So in order to handle the majors, in the mid session they make the swings between the low and the high. They don't make any big moves. So obviously we can try to avoid taking positions during mid session. Either we try to take it during the early session or late session and identify the type of moves accordingly, maximize the profit, eliminating the risk by keeping stop at entry. So these sort of trading strategy are very vital. From this week onwards, we'll come across the trending moves. I'll explain to you what sort of possible trending moves we could see. Then with regard to the initial lows and the highs, we are noted down around 3:30 GMT. Euro formed the low 1.3081 and it is still closer to that but not breached. Probably they may make a false move up to that during the late Japanese session around 6:30 GMT and firm up. Then in the case of the initial high is 1.3131 which is also not breached. In the case of GBP, the low was 1.5770, they are not breached it. 5823, the high, which is also not breached. And yen 7650 is the low, 7675 is the high, and they breached it by 5 pips and formed 7680. So which indicates that they wanted to make good upward move in the case of USD yen today. So during that time, Euro and GBP might be sluggish and they may focus more on yen and try to gain some levels afterwards because we know that it went up very quickly to 77 area and from there it has dropped. After non-farm payroll, it has started gaining again. So it is expected to make the gaining as a contrarian move when Euro and GBP are also gaining. Then in the case of CHF, they have done enormous consolidation around 91 area. 91.90 is the low and 92.20 is the high. They have not breached the low or the high. They could consolidate, focus more on yen and try to gain the levels. Later on, USD CHF could also gain the levels. In the case of Canadian dollar, they have made that deep downward stop to 99 area. 99.28 is the low. 99.56 is the high. And they have not breached the high or the low, but they are staying near that of the high. And in the case of Australian dollar, 1.0711 is the low, 1.0775 is the high. They are not breached the low or the high, but they are staying closer to that of the low. And since Australian session, they formed the low, or during the active trading time of Australia, they have formed the low, and they may not make much of a downward stop and here, and they may consolidate and slowly gain some levels to that of the high in the case of Australian dollar. So first yen is expected to gain the levels, followed by that you could come across CHF and Canadian dollar to gain the levels. Then you might find Euro and GBP gaining the level. Australian dollar is also expected to gain the levels to a certain extent to that of the high. Then what are the expected market moves for today derived from that of the algorithm? So during the Japanese session, swing and firm up moves are expected. And European session starting, there could be a dip, and that could be the week beginning false move. A dip, and already they had done the dip from that of the Friday close, and GBP Euro they have done it, and GBP they may do it in order to create the market sentiment, and then they are expected to rise quickly. A little bit of volatile moves to create uncertainty during that Euro-US session, and then further rise could be seen. Then from tomorrow onwards, we could come across the upward trending move. So the trending move could become visible from tomorrow, but even by US session today, we should be able to see that the players intend to make gaining moves in the case of Euro and GBP, and also in the case of the denominator currency. Now if you see USD yen, they have formed the new high 76.80 and 76.75 was the initial high. Still they are staying above that of 76.75, 76.77, 76.78 are the current levels. So they are holding it above for more than 30 minutes in my observation. So they are expected to gain quickly the levels during the late European or early US session in the case of USD yen. Late Japanese and early European session. Let me minimize the PowerPoint presentation and try to answer to that of the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market page. Isn't it correct? For trend reversal, we should see Australian dollar lead and lag and reverse, followed by Japanese stocks to lead. Yes, that is how it is. Australian dollar has been leading the rally since 2009 and it is now starting with a lag. But yen is not gaining yet for yen process to lead. See, you are confusing with regard to the pretty long time trend reversal moves, but they have done it in from that of 2007 onwards is a multi-year moves. So in 2008 they made the multi-year moves in the case of numerator currency 0 and GBP, and in 2009 they had dropped it, and 2011 they made a quick drop in the case of the denominator currencies and also Australian dollar, and now they are reversing. They have to bring it to that normalcy or normal trading range in all the currency. Then you will come across the trend sequence of trend reversals will become meaningful for you. And otherwise, if you just refer to that of the levels, what they are shown earlier, then you will be able to understand they are doing the sequential trend reversal. So in the case of euro yen, for example, if you have noted down 120 earlier and now you see 100, you might think that it is not reversing. But compared to that of yesterday, day before yesterday and week before, you will be able to understand the trend reversal is happening in sequence. And is it enough that hold yen and raise the numerator major so that yen crosses can lead to trend reversal? See, they have been doing it as I explained that they wanted to focus more on yen today and they are expected to gain the levels as well. Don't compare the long-term forecast with the intraday or within the week. You will get confused. And that is the main reason that when you go in for the 200 days moving average or a larger data pertaining to 4 hours chart or a 8 hours chart or a daily chart, then invariably you find that the trend is downward in the case of euro and GBP because they have been trading in 2008, 2009 at a higher level. So obviously the trend will appear downward. But if you take the short term, about 1 hour chart or 30 minutes chart or 15 minutes chart or 5 minutes chart, you'll find the trend is upward. In between there are pullbacks on the downside. So invariably it is a question of perception. What is the time frame you are taking into consideration? But ultimately the current is more important for us to take trading decisions. Currently, whether I can take a buy or a sell in the case of euro. For that, if you refer to that of the initial low and the initial high, it will be meaningful for you. That is the main reason that I recommend people to look into that of the live market code page rather than going for the chart study, because ultimately you want to aim or you want to do a small swing trade for about 30 pips, 50 pips and things like that. Then check. If hedging is not available, would use two different accounts good substitute for this strategy? May not, because sometimes you come across extended moves or extended stop-ins and things like that. It all depends upon your usable margin. Suppose you have got one account with $5,000, another account with another $5,000, and take two lots position in each. On the buy side in one account, sell side in another account. When they make a whipsaw move on the downside as well as the upside, both accounts will be closed. Because over trading can easily close that account. When you are having $5,000 account, then you can think of one mini lot at a given time. And if the hedging is not available, you can just use another $5,000 account and take one sell position, one mini lot. Then the strategy will work. Otherwise, there are two things in the market. One is the stop end. So if you keep the stop, they try to hit it. And another one is margin call. The entire equity can hold only to a certain extent the positions. That you have to keep it in mind. That is also another way of stop end. So if you are prepared, and for that to avoid margin call, you have to take very less positions. You might think that taking one mini lot when I am going to become a rich man. But if you try to take more positions, you will become poorer in a short time frame. Then yes, what about USD CHF move for today? Yeah, it is expected to gain the levels after gain in the case of USD Then JAD. Do you see USD INR moving to 51 level by end of this? No, sir. They had done the multi-year levels of 54.80 and they may not visit again above 50. And you could come across that it is coming down to 47, 46. And end of the month, we might be able to see that it is trading around 44 area. Currently, if you see USD INR is trading around 48.74. It's the week beginning false move as a pullback on the upside, and later on it could close around at a 48 or 47 area, and you could come across the drop happening very fast. That is how they do it. After prolonged upward stop and extended rise for a multi-year level, they drop it just like that without any reason. And when the traders are all bullish, any good drop, they think that it is a good buy opportunity and buy it, and they don't sell. After perceiving 54, 53, they hesitate selling around 49. This is the normal sense. Common sense of humans. So they know very well how to exploit it, and always keep it in mind to rise the level. They take a longer time, about 2 months, 3 months, etc. To drop it, they do it in a few days. Should I buy after mid-year session? You can buy anytime, no harm in it. You can always try to take a buy position when the low has not been breached for more than 30 minutes of your observation, and try to book profit using stop at entry and trailing the stop. Again, re-enter during your session. So if you think that I wanted to have a best entry possible, it may not happen, because by the time they show your calculated best entry, the market will appear very frightful and you may not buy it. At that time, probably a bad news would have been released. For that, they would have just made the drop, and you will hesitate buying it. And before non-farm payroll release on Friday, and Euro was trading around 31.50, and then quickly after the release, they made straight away the rise to 1.32. And immediately, everybody was willing to buy during the drop, a pullback, so that re-enter and go up. It will go up definitely. So the players also know the tricks of the traders. So they dropped 50 pips. Then people hesitate buying it. And afterwards they made a drop of 20, 30 pips. And the people hesitated buying it. And some entered. And subsequently they made a downward stop and came below 1.31 and started going up. So in what way non-farm payroll is important for this sort of move? So what we can derive out of that non-farm payroll, whether Euro and GBP are expected to show the USD gaining move or the USD weakening move, or it has to show the risk appetite move or risk aversion move. So they have the different story altogether, because they know very well how exactly the traders are holding positions from time to time. Accordingly, they make the moves. So it is not that if you think that I will be entering at the safe level, when the safe level comes, you may not feel like entering into the market. This is the normal scenario you come across in the market. To come out of that fear, what has to be done? So you just calmly watch during the US session as well. If you are having a time slot of trading during the US session, you try to wait during session start time and watch for 30 minutes. If they have not breached the low or the new low or whatever it is, for 30 minutes of your observation, then you try to take buy near that of the low and still use the hedging order to limit the risk or 30 pips stop. So you take a chance for 30 pips, and if the going is good, immediately keep stop at entry. Once the position makes about 20-25 pips profit, keep stop at entry. So that you are eliminating the risk. So in trading, there are two things. One is the reward. So once your going is correct, then probably you get money. The opposite is the loss. So as a wise person, what you are supposed to do, you have to first of all arrest the loss proposition or the possibilities by keeping stop at entry so that you don't make any loss. You can hold the position for at least 2 hours, 3 hours at the end of the session and try to make profit out of that. Because after keeping stop at entry, when the stop is not filled, understand they don't want to drop it. If you are stopped out, say, suppose you have got a buy at 30.84 and they went up to 30.95 and came down quickly and hit you a stop. Don't feel bad about it. Just 30.84 they have stopped you out for they have come down. 30.84 and the low is 30.81. Have they breached 30.81 or have they breached 30.84 for 30 minutes of your observation? They have not gone below that. Re-enter around 30.85 or 30.82 or 30.85 and just keep again a stop of 30 pips. So when you do like this, when the loss is very minimal and the position, if it makes profit, if you keep stop at entry, you feel like keep trying in the market. If you continue to lose in 2-3 trades only, the big problem comes. You become mentally demoralized. You hesitate entering into the market. So control your emotions that way by using effective trading strategies. Matthew, can we expect a brief downward stop and below 1.30? I do not expect that. And now, see, last week was a great chance because it is a big, the month end and the new month beginning, they fell in a particular week. So they are bound to show a lot of volatile moves during such time in order to handle the derivative markets. But there again, they came down to 1.606 and 1.3066 and not below. And when the traders are just waiting to enter into the market, they will not show such levels so easily. Euro touching 1.29, I'm not anticipating it. And Jack. Do you expect the outcome of Greece meeting? 10 GMT. See, during the early European session, I'm expecting a dip. Before that, during the late Japanese session, they are expected to firm up. They may firm up to that of the high and then make a dip during the early European session. So early European session is from 8 to 9:30 GMT. So in that early European session, they are expected to make a dip. And if when Greek meeting outcome is expected to come by 10 GMT, then they are expected to spike up. So this is based on my time study. Nothing to do with it what sort of decisions they are going to take in the meeting. The meeting ought to be positive and it could give the trigger for Euro and GBP to gain very quickly. Then check out expected low for GBP. GBP they may make another 10-20 pips dip because already they had done about 75 pips in the case of Euro, but GBP they have not done it because they wanted to gain some levels in the case of Euro GBP to start with. And then subsequently they are expected to make one downward kick and then gain levels in the case of GBP. So that way they can create market sentiment. So they could come to 57.60 or 57.50, or sometimes the psychological level 57.50, they may breach 57.46 and then go up. Quickly they make such moves. Only if the order is there, it will get filled. Otherwise, if you try to buy, the slippage will happen in the market. So they do it very cleverly so that you don't buy at the bottom. Will yen likely to go up quickly? Do you expect yen crosses to raise? Yen is expected to go up today because it is holding above 76.75, the initial high, and it is expected to go up. At the moment, you find because of euro dip and GBP dip, and euro yen and GBP yen are in nominal negative net change, and they are expected to move up. And we could come across today during that European session, late European session, USD, Euro GBP and USD yen gaining, and also USD CHF gaining as a contrarian move. So from time to time, you will come across contrarian moves. You have to keep it in mind. In color. Do you believe USD CHF will reach 35.50, 34? Yes. In this week, it's most likely it could reach back to 95 area and go above. When will be the USD CAD rise? Yeah, USD CAD is the next candidate to rise, and they had done extreme downward stop on Friday and also today. So it is likely to gain the levels, and they are holding near that of the high, and they are expected to certainly gain the levels in the case of USD CAD from now. Audio problem. Then expected gold low for gold, Phoenix. Gold is expected to come down to 76.27, 76.30 area, and then it is expected to go to 77.70. Sorry, 17.70. And DTPT. How much downward move is expected in Australian dollar? Probably breach 1.07 by tomorrow and then go up, and it is going to be in the range bound as I explained it, because not much of a drop is expected in the case of Australian dollar, and the gain is also going to be very minimal. Australian dollar is expected to be in the range. Then is GBP expected to visit 1.56 before any rise? No. Deep drop are not expected. So they may just do a few pips below that of the low if needed, if they want to hit the stops below that. Otherwise, not anticipated or expected. So let me go back to that of the PowerPoint presentation and explain. RBI rate decision tomorrow. What is your opinion? They are not expected to cut the rate, to my understanding. But even though market is expecting it. And that could act as a trigger, and tomorrow you could come across Australian dollar going up. Then, with regard to the initial lows and the highs, the euro has not breached the low or the high. GBP also not breached the low or the high. Yen still staying above 76.75 and come down just to 73.75. And it is a likely candidate to go up first, and CHF 91.90 and 92.20 not breached, Canadian dollar 99.28 and 99.56 not breached, Australian dollar also not breached the low or the high. So yen is expected to go up again, and followed by that denominator currencies could gain like Canadian dollar and CHF, USD CHF, and later on Euro and GBP are expected to firm up to that of the high and make a dip and then gain the levels during that of the mid-European and late European sessions. And US session, there could be a little bit of volatile move to create the uncertainty, and then they are expected to gain again. So swing and firm up moves are expected. They are all pertaining to Euro and GBP, the numerator currencies. Swing and firm up during Japanese session, and a quick dip and a rise are expected during European session. Then volatile moves to create uncertainty during start of the US session, and then rise are the expected moves. So The trending move could commence from today on the upside, and you could come across more visible gains happening in the market in this week and also in coming days. So avoid doing sell and buy trade. Whenever there is a quick drop like this, you can view it as a false move on the downside before making a big next rise. At that time, you try to buy, but to limit the risk, you always use the hedging order, the stop. Keep an optimal stop. Don't keep the stop like 50 pips, 70 pips, and things like that. Keep only 20, 30 pips stop. And if the going is good, keep stop at entry and try to develop the habit of taking lesser loss and maximize the profit. And that will be the professional approach to trading. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. And I'll come again tomorrow to review the market. And we will do it on a daily basis to find out where exactly they are taking up the market and also try to compare the forecast and the market reading so that we will be able to understand how far they can deviate from the other forecast. But finally, they are expected to move in line with the expected market moves. Thank you one and all. See you tomorrow.